Have you been wanting to get pre-approved for a home loan but just don't know where to start? I'm Gabe the House Guy with United Real Estate Pacific States, and that's what I'm going to be talking about next. First off, let me start by saying that I'm not a lender, I'm actually a realtor, so the information I'm going to be giving you is generalized information. But if you have any questions, be sure to leave a comment and I will be sure to get you that answer. Getting yourself pre-approved for a home loan is a fairly simple process. It usually requires you gathering up some financial documents, giving it to your lender, and in about 2 days or so, sometimes I do it in a day, but in about 2 days, you'll have a response as far as how much you qualify for. Now, depending on your down payment amount and whether or not you're a veteran of our armed services, you will fall under one of the various loan programs: FHA loan, conventional loan, VA loan, or a first-time buyer CalHFA loan in conjunction with the FHA loan. Now, these loans I'm going to talk about a little bit more in detail on a further video, but for now, let's talk about some of the financial documents you're going to need in order to get you qualified. Take a close look at the list. Pause it for a second if you need to. These are the things that you're going to require in order to get you qualified. It all depends on what kind of loan you're going to get. If you're not a veteran, obviously you're not going to require the DD-214 or the disability letter. Or if you're not self-employed, you're not going to require the profit and loss statement. But take a look at that list, pause it if needed, and let's move on. Once your lender has the info, he's going to calculate the income that can be used. Sometimes all the income that you earn cannot be used. For an example of that would be if you're a business owner and you receive a lot of cash payments and you don't report those cash payments. So in other words, you don't deposit those payments into your account, then we can't count that as income. Even though you get the benefit of the income, it might be $10,000 or $15,000 in cash that you receive in a year, you can't calculate that as income if you don't deposit it into your account. So be sure to deposit your money into your account if you're planning on qualifying for a home loan in the future. All right, let's talk about the credit. If your credit is less than ideal, there are solutions. There's a company here in Murrieta called Dedicated Credit Repair. They are known to improve credit scores in as little as 6 months, sometimes a little less, sometimes a little bit more. But point is, time flies, and so might as well get working towards your home ownership goals. Right, last but not least, let's talk about the ratios. We have the debt to income ratio and the front end ratio, which is also called the housing ratio. Debt to income ratio is probably the one that you're more familiar with, but the housing ratio is the ratio of housing payment and your income. So lenders don't like to see you be above 35%. So they don't want 35% of your income. Well, they don't want over 35% of your income to go towards housing. If the smaller that number can be, if like 10% of your income goes towards housing, 15%, 5%, how great is that, right? You hardly put any of your money that you're earning goes towards housing, so you're going to qualify. But they let you go up to 35, sometimes a little bit further than 35, but they really don't like to see you stretching out your income, that much. They don't like you having so much money towards a payment. So the other ratio is the debt to income ratio. So what that is the proposed payment and your bills together divided by your income. So what they do there, they end up with a number, and they don't like to see that number above 49%. So if you go above 49%, or almost half of your money is going towards bills and housing, they don't like that. That's a little too far. You're stretching your money too far, and it makes the lender feel uncomfortable. But anyway, whatever those numbers are, the lender does all that work for you and calculates it. And once they're done, they end up giving you a pre-approval letter. And that letter will have your name on it. It'll have your credit score. It'll show how much money that they can lend you. And with that letter, we can go out and look at houses, make offers, and boom, get yourself into a house. So God bless you. I'm Gabe the House Guy with United Real Estate Pacific States. I know this little talk went a little bit long, but I hope to help you in any way that I can. Just reach out to me. Talk to you later. Bye-bye.